This optimal trade entry system is better than any other ICT strategy. ICT himself says if you stick to one rule-based system, you will become profitable. In this video, I'll be sharing a secret hack that no one is talking about on YouTube that absolutely maximizes the risk to reward for this strategy. And I've tested it myself, I've forward tested it, back tested it, live tested it, and I'm telling you guys, it's a game changer. I'll walk you through all the rules for the setup, no daily bias is required, and it's the easiest system to follow. So let's get straight into it. The pairs it works best on is Euro USD, GBP USD, and S&P 500. The setup we're going to be trading is the New York Optimal Trade Entry. So this is 9 AM to 10:30 AM New York time, 2 PM to 3:30 PM London time. It's only an hour and a half of looking for entry, so it's not long at all. The time frames we're going to be flicking to and from are the 5 minute and 1 minute. However, there's no daily bias at all, so it's really easy, guys. The setup we're going to be trading is a liquidity sweep on the 5 minute, market structure shift with displacement, and Fibonacci optimal trade entry all on the 1 minute. I'll show you this in live market examples, so stick to the end. Also, we got a set criteria, so set stop loss, set entry, set take profit on every single trade. So I know I'm also going to be showing you a secret hack that I'm not showing over here. I'll show it on the live chart examples, so make sure you stick around. So we got set risk to reward for each take profit level. So I'll break down the examples first, and then I'll go into the trade management and actually how to take profits and set your stop loss. So before 9 AM, we allow price to do whatever it wants. So once we've delineated our time window that we're going to be trading in, we let price do whatever it wants, right? It can make highs, make lows, be consolidating, trending, whatever it wants. So all we wait for on the 5 minute time frame is a liquidity sweep in either direction. Remember, no daily bias is required, so a liquidity sweep, bullish or bearish, whichever one. So on the 5 minute, for example, this one over here has done a bullish liquidity sweep to the upside, so taking out buy stops. So we're going to be looking for sells in the opposite direction that to the liquidity sweep. So we're going to be looking for sells on the 1 minute over here, which is why I marked out in green. So we're going to scale down to the 1 minute time frame, which I've done so over here. So on the 1 minute time frame, you'll see structure like this. So you'll see highs and lows. So for example, this is the liquidity sweep that happened, and the low before the liquidity sweep is where we want the market structure shift to actually occur. So this is the main low that we want a market structure shift at. And guys, market structure shift, breakout structure, change of character, it's all essentially the same thing. All we're waiting for is a move with momentum, with speed, a body closure below. You could call it engulfing, a fair value gap created, whatever you want to call it. But the main criteria is that the body closes below this market structure shift low. Then after it closes below and it shows us a willingness to go down to the opposite side and target opposing liquidity after we enter, all we look for is a Fibonacci retracement setup, the optimal trade entry setup. So ICT's favored entry is the 0.705. However, he also enters at the 0.62 level, which a lot of you might have heard. However, he enters a few pips below, which is why I put 0.59, the 0.59 level, as the actual entry setup. So we get tagged in just a few pips or points below the 0.62 level. However, 0.705 is the favored level, and on the live chat examples, I'll be showing you a trick to maximize the risk to reward by entering over here. However, I'll show you that on the live chat examples. So we have a set stop loss, set entry, set take profit criteria. So the stop loss always goes above the high. And you might be thinking, if it always goes above the high, we're going to have a massive stop loss. But no, we're going to be on the 1 minute time frame over here. So the stop loss is actually going to be minuscule compared to the daily move and the move that you could catch in general, right? So the stop loss is going to be above the high. And then we're going to set our take profit at each level that I've marked out over here in green. So the 0.14 level is going to be our first take profit level. A lot of people think that the 0 level is. However, the 0 level is not the first take profit level. Why? Because price will give you a run to the downside over here, stop just short of the 0 level where your take profit is, and the price could reverse in the opposite direction. So you're once in a winning trade, and then price ends up stopping you out at break even. And I know this has happened to some of you guys, a lot of you guys actually. So that's why I've set the first take profit at a set 1-to-1 risk to reward ratio at the 0.14 level. And also once price goes to this 1-to-1 level over here, so once price is at the 0.14 level right here, what you want to do is move your stop loss to break even, so you're risk free on the trade. Then as price moves down to the 0.25 level that I wanted to, it's up to you if you want to secure it. However, what I'd recommend is trailing your stop loss. Now, a lot of people trail the stop loss too tight. So let's say this is your 0.25 level right here. What you want to do is you'll see the 1 minute structure like this. Remember, we're just going to be on the 5 minute and 1 minute. So on the 1 minute, you'll see structure like this. So you'll see two lower highs, for example, over here. So a lot of people set their stop loss, the trading stop, below the first lower high over here. And what will happen, this price will actually wick them out, it'll take them out and carry on tanking in the opposite in their original direction. So what we want to do is trail our stop loss to this high over here, so price can take out this high and use it as a liquidity grab. However, if price reverses fully, then we're out of the trade at a decent area. However, we want to still hold on to the trade if it does go in our direction overall. So we don't trade it too tight, we trail it above the second lower high, or higher low if you're buying. However, for this example, sells the second lower high before hitting your main take profit level. So remember, it's a rule-based system and it's really, really easy. This is the full step-by-step guide you guys need to find profitability and actually succeed and find consistency. Just if you stick to this and trade it like a robot, then you will succeed. So we've also got the 1 to 3 level over here. So you do the same trade management. So the second lower high you trade it to, and so on and so forth. And at the -2 level, you probably take a full take profit. And remember, there's no daily bias, so you would be following this system. So before we get into the live chart examples, if you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours and the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded and don't waste time. So let's get on the live markets and let's show you some examples. So for the first example, I'm also going to share with you the secret hack that absolutely maximizes the risk to reward for this strategy. So let's get straight into it. And also the second example is going to be a lot harder, so make sure you stick around. So at 9 AM, we're going to be watching the live markets on the 5-minute time frame. So we let the markets do whatever it wants beforehand. However, we mark out the liquidity points before it. So we mark out this low right here. We've got a valid low. We've got a valid liquidity high. We've got this high as well. And you could also say you got this high right here. When you're watching it in real time, you'll be marking out all of these. And all you're waiting for is a liquidity sweep in either direction. There's no daily bias. And after the liquidity sweep happens, we scale down to the 1 minute. So the price has just swept this liquidity over here, as you can see. With this 1 5-minute candle over here. So now we go down to the 1 minute time frame after the 5 minutes closed, and all we wait for is that market structure shift with displacement. So the market structure shift high before this liquidity sweep, this mini liquidity sweep, and the main liquidity sweep on the 5 minute also is right over here. So as price is pretty far away from this high, price could also go down to grab more liquidity before reversing. So if price was to make a new high right here, if price was to make a new high and before sweeping liquidity, this would be our new market structure high. So we let price play out, do its thing. Okay, as you can see, it swept more liquidity. So this will be our new market structure shift high. And as you can see, price has swept liquidity with this low right here. So now all we do is wait for a break of structure, market structure shift with displacement, which has happened right now. Bodies are close above. So at this point, what you want to do is pull out the Fibonacci tool right here and set entry, set take profit, set stop loss criteria. And if price tags us in, we're going to take the trade. If not, if price swerves us and ends up hitting like around the 0.5 area, what you can do is wait for a break of this structure, because if price breaks this structure now we're trading off the new leg, which is this low to this high, and we'll fib that. So we let price play out. Okay, as you can see, it swerves us, but it's not broken that high, so the trade is still valid. Okay, you can move price up even there, Fibonacci. As you can see, price ends up swerving us and closes above the next high. So now we've got a market structure shift over here. So you mark out the original high that it made just after the first market structure shift. And now, because the bodies are closed above, we go from the new low to the new high, right? So now this is going to be our low to the high. We're going to delete this limit over here. And all we're going to do is wait for the retracement to the 0.59 level. So remember, it's a set rule-based system. So we set our entry here. Stop loss always goes below the low over here. And look, it's only a 4.8 pip stop loss, which is absolutely nothing compared to the average daily range for your USD. So wait for the next candle to play out. As you can see, it's moved a bit higher. You can adjust this over here and adjust the entry as well with that. So now we've set our limits on the 0.59 level. Now for the hack. The hack for this system, ICT favors the 0.705 level. That's the real optimal trade entry. So what you can do is after entering at the 0.59 level, you could enter with the same risk. However, you reduce the stop loss. So you got the same lot size on, however, you got a higher risk to reward trade. So let's say, where do you target now? So obviously we've got all our main TPs over here. However, because we've got untouched liquidity over here, you could target these highs right here. However, we're trading based off the Fibonacci, so it could be at the -1 standard deviation level, which is a 1 to 4 on the 0.59 entry. However, that same trade idea is providing us with a 1 to 5.5 with the second optimal trade entry idea, and this absolutely maximizes the risk to reward, and you can really pass funded challenges with these in literally 1 or 2 trades max, and literally in one day you're getting high risk to reward trades. So now, as you can see, price has broken structure again. Let me just reduce this a bit. So now we've been tagged in and price has moved away nicely. We've seen a body break, so another market structure shift right here. We've seen another market structure shift. Let me just get rid of this over here. Okay, so price has another market structure shift, and all we need to do now is follow the rule. It's a rule-based system, follow the rules. So price has now broken structure, so now we could do another entry over here, set another limit over here on the 0.59 level, and also on the 0.705 level right here, and set your TP at the same level as the original trade, or you could target here. However, it would be safer to do it with the original trade entry. So let's see what price does over here. Okay, it goes slightly higher over here, and as you can see, it's made relative equal highs now, so you would have adjusted this like that. As you can see, the stop losses are not big at all. There we go. They're going to be our entries, and let's see if price hits our take profit. And as you can see, just before our trading time closes, price absolutely smashes the take profit and goes even higher. So what did it go for? This went for 1 to 3, and this trade went for 1 to 2. However, this trade went for 1 to 5.5, and this trade over here went for just under a 1 to 4. And if you were to target higher, if you did have your daily bias, you could have targeted much higher levels. However, with no daily bias, you could literally succeed with just this strategy. I'll show you one more example. So let's get into that one. Okay, so for this example, we're on the 5 minute again. We've delineated our time window. We just wait for a liquidity sweep in either direction. So you can see a high right here, and you can see a low right here. So these are our main liquidity points. Let's see what happens. Okay, so price sweeps this liquidity in the 5 minute closes. So now we go down to the 1 minute and look for the market structure shift. However, the low's all the way here, again, pretty far away. So if price takes the high out, we could look for a new market structure shift low. So, okay, as you can see, price touched these lows. However, price did not close below it with the body and with displacement. So we're not looking for sells just yet. So we could expect this high to get ran, which it does. So now this is not our new low. We adjust our new low now. So you're waiting for a market structure shift. As you can see, price has made a valid low right here. So all we're waiting for is a market structure shift with displacement now. Okay, so as you can see, even here, it's made a low. However, before the liquidity sweep over here, this was the main low. So you could wait for this to be broken with a body as it closes the body. As you can see, yes, it's closed below, but we get a retracement. Okay, just wait for it to start pulling back up, and then we pull the fib tool out. So from the main high, remember it's a rule-based system, so main high, the main low right here. And as you can see, price taps into our 0.59 level perfectly. And as you can see, we've got untapped liquidity right here, so you could target the nearest fib level to that liquidity point, which is a 0.62 level for 1 to 3. And following the hack, you guys could literally just put your stop loss at the same area, increase the entry, and increase the risk to reward overall for 1 to 4.5 on the same trade. So let's see if price tags in. Okay, it tags us in and absolutely tanks down. And now what's price done? So let's just rewind to this bit over here after price broke this next level. So that's our main entry done. That's our original entry. And as you can see, price broke this new market structure low. So it's on a market structure shift with displacement as it closed below. So all we do is follow the system, pull our fib out from the high, original high to original low, 0.59 level right here. Let me just reduce this entry so you can see it a bit clearer. Right here, you could put your entry, same take profit, and do the same with a 0.705 level. Just move it across. Okay, and this 0.705 level gives you a 1 to 3.7 just over 1 to 3.7. And as you can see, price swerves the 0.705 level. However, it does tag in the 0.59 level, giving you a risk reward of 2.45 on this trade, 1 to 4 on this trade, just over a 1 to 4.5. And what does it give you on this trade? It gives you a 1 to 3 on this trade. So it's really possible for you guys to actually pass platform challenges with this. And if you're struggling with other ICT strategies and don't know where to get started, this one is for you. This strategy is for you. It's the easiest system to follow. It's very rule-based, very mechanical. I show everything in detail, even when to manage the trade and how to manage it. So like this video, share, comment, subscribe, share this video with a friend. And that's all for today's video. I'll see you next time. Peace.